Welcome to Greater Good Radio Hawaii, where leaders inspire leaders. Greater Good Radio Hawaii is dedicated to social entrepreneurship. I'm your host, Evan Leong, and with me is my co-host, Carrie Leong.
Thank you, Evan. Today's guest is a general partner of HMS Hawaii Management Partners, which is one of the leading venture capital funds in Hawaii. He was an early-stage investor in two public companies, Digital Island and Hoku Scientific. Please welcome to Greater Good Radio, Bill Richardson. Welcome to our show, Bill.
Thanks.
So in your own words, can you tell us what a venture capitalist does?
Well, there's lots of people's definition of it. I guess I would say that I'm more of a West Coast style venture capitalist, and I'm in the what's called the early seed and early stage investment environment, where we try to take other people's money and accumulate it in a pool of funds that we then invest in what we believe to be promising high growth companies run by strong management teams, help them grow, and then, in my case, pass them off to larger investors and, in some cases, onto the public markets if we're very lucky.
So who would be an organization, or is it individuals that you're raising money from?
Yeah, most of my limited partners are institutions, although there are quite a number of high net worth individuals involved. The original investors were the State of Hawaii, Queens Hospital, Hawaiian Electric, Bank of Hawaii, and others.
And when you become a venture capitalist, do you have contacts to these people with this money, or do you just kind of go in cold and introduce yourself and try and build a relationship that way?
Well, in my case, I was a little bit lucky because I was asked to join a partnership that was already in formation by my partner, Dick Gray, who had been invited by the State of Hawaii to participate and use some of the original Hawaii Strategic Development Corporation funds that were allocated in the early 90s to build an entrepreneur and venture capital environment in Hawaii. And Dick had part of the money already raised. I think in general, you have to have quite a bit of contacts. I think most venture capitalists came out of very successful operation companies, or in some cases, big consulting companies. But venture capital didn't exist in Hawaii before I came on, and I happened to be in the right place at the right time.
Can you explain for the layman out there why a venture capitalist is needed? Because a lot of people think, okay, if I'm going to start a business, maybe I'll go to a bank or, my friends or family or so on.
Well, the model for growing high-growth entrepreneurial companies is a fairly standard one in Northern California and perhaps the Boston Route 128 area, but it takes an awful lot of specialization in terms of helping companies grow very rapidly. It requires a lot of contacts. It requires a deep Rolodex. It includes hiring the right people, getting the right funding sources in line, and sort of building it according to the West Coast model, because you cannot get follow-on financing. To back up a little bit, it takes somewhere between 3 and 5 rounds of financing generally to get to a public offering. And Hawaii doesn't have the capability to fund more than perhaps the A and B rounds. So what you need is to build the company as if you were going to be a portfolio company of one of the large venture capital funds in California. And so you have to build it in a very specialized way, and you have to follow the rules, because the California venture capitalists are looking for reasons not to do your business. And you don't want to give them the opportunity to pass on your business just because you had structurally formed your company in an incorrect way.
And as a venture capitalist, you're looking at a specific reward. What is that?
Well, you're looking for a liquidity event, but that can take many forms. The way that I tend to look at it is that if you build a company as if you were going to become a public company, and you put all the proper accounting structures in place and all the right capital structures in place, that if at some point along the line either the management wants to buy the company back from the investor group, or if another larger competitor comes along and wants to buy you in an M&A situation, then you have the decision and you have the capability of continuing toward that public goal or selling the company. My experience is that the two companies that I've had significant liquidities were gotten through the public markets, although two of our companies were sold, but they tended to be sold in distressed situations.
So as a venture capitalist, are you just looking at any company that might need funding, or are you specializing in a certain area like technology?
Well, that's a long answer as well. You're looking for companies that have what I call an unfair advantage for a significant level of time, because the only way you can really grow a company is it has to have a very high margin product, and it has to be protected in that margin from other competitors. Otherwise, you cannot really sort of make a market with that company. So that forces you into, tends to be high technology companies, because those are the only ones that have either patent protection or business concept protection, where they can grow very rapidly, free of competition, and make it to the public markets. So that is part of the answer. The other part of the answer is, being in Hawaii, we have to follow the kinds of strengths that exist in Hawaii. And, if you look at our environment, we have the ocean around us, so marine sciences and marine biotechnology and marine engineering are strong areas here. We also have a very strong communications department at the University of Hawaii, so telecommunications infrastructure has always been a good space to be in. And with other companies that are in the alternative energy, environmental remediation areas, we've had success there, as evidenced by Hoku.
Thanks for tuning in. Stay tuned for more on Greater Good Radio.